first, we have to talk about some of the rotation that we've been seeing play out in the market here over the last several trading days. Small caps outperforming the S&P 500 in the last week as investors are now starting to price in the high likelihood of a rate cut, 100% chance of a cut by September. That's according to the latest figures out from the CME Fedwatch tool. Our very own Josh Schafer joining us now to talk about this. So, Josh, we have seen the shift in terms of the optimism. We have seen small caps catching a bid here, but the question though is, does it really have some room to run at this point?
So we've done this before, right?
I
think that's the important way to start this conversation. We had this conversation in November and December of last year. We had this conversation in February and March. So yesterday I went out to some strategists and just said, what is different this time, if anything? And strategists do feel like this is a little bit different this time because quite simply we're closer to those cuts. We're talking about a September cut. It's the middle of July. So that's actually supposed to come pretty soon. It also comes at an interesting time for the fundamental story here. So we opened talking about small caps, but I want to talk a little bit about just sector rotation within the S&P 500. We're supposed to see the earnings recession end for the 493, which takes out our Mag 7, the big tech companies. That's supposed to end. We're supposed to see earnings growth for the first time in about 6 quarters for the 493 right now in this reporting period. So they feel like there's sort of a fundamental backing here. And then from this quarter on, you're supposed to see earnings continue to pick up for that 493 while they fall for your Mag 7. Rising earnings would normally be kind of the strong fundamental story, right? So if you get that, that's key. Where people are sort of more cautious is we're talking about estimates, right? And last quarter, if you remember, Mag 7 was supposed to have a little bit of a decline and it didn't really have a decline, right? So that's estimates, it might not happen. And that's kind of the other side of this with the Fed rate cut. So the Fed rate cut is where people like to talk more about small caps. Small caps are more of the play once the rate cut actually happens, not necessarily leading into it all the time. So people aren't fully saying right now is the time to dive into small caps. It seems like they're more positive on that post rate cut. And then the larger question there being, why do we get the rate cut? How many cuts are we actually going to see this year? And so it seems like the pause is probably more on the Russell 2000 than it is on the sector action that we've seen within the S&P 500. There aren't a ton of strategists right now that are super, super bullish on just diving into small caps. I don't think that, even though we've seen that come up a decent amount over the last couple of days, that doesn't seem to be really the widespread call.
What's the biggest driver of the broadening in those 493? Is it rate cuts or something else?
I feel like right now it seems like it's a little bit of rate cuts, right? At least that is kind of the broad sentiment. You've seen the shift since that inflation print, right? I don't think it's ironic that this all started happening last Thursday after a better than expected June CPI. So if we look at just when the movement started, that sort of gave you your go, and then you see kind of what happened from there, I guess, and it'll be interesting to see. We're looking at 100% priced in for September this morning. We know those odds basically shift every day. Yeah. And so if it does scale back, what does that do to kind of the rally that we've seen? And will people step back out, I think is perhaps maybe the most interesting part of this. And then also, we still have big tech earnings to come. And just because people want to buy other areas of the market doesn't mean that those companies doing well kind of brings people out of big tech either, right? There's sort of this discussion right now, I think, of, well, people are rotating out of big tech into these other sectors. It doesn't mean that big tech still can't work too. And I think when that fundamental story from big tech comes out with the earnings, you're going to see sort of where the chips lie with that.